Hi, I am Renuga Devi. I am working as an assistant professor in Dr. S.N.S. Rajalakshmi College of Arts and Science. I belong to Business Administration Department. Okay. Last video we discussed about the aggregate demand. Okay. In this video we are going to discuss about the aggregate supply. So the supply point when we are discuss in the particular video is nothing but the supply of products that companies produce and plan to sell a certain price in a given period. So say for example refers to the finished goods that consumer purchase during a specific time. Okay. So the aggregate supply is represented by the aggregate supply curve. There is something typically positive relation between the aggregate supply and the price level. Okay. So supply is the total amount of goods will be making the services produced at a specific price point for a particular period. Okay. So the short term changes or the long term changes. Suppose we are taking the opposite reactions making between the aggregate supply. While we are talking about the short term changes in the aggregate supply, you will be impacting the either by significantly increase or decrease in the demand. Okay. Next, that is a long term changes. So under this long term changes, the impacted will be making the some new technology will be significantly or changes in the industry. That is the long term changes. So short term, when we are talking about the short term, that time the demand either the increase or decrease. But in the long term, suppose we are going to increase the or introducing the new technology, or suppose we are changing the some important aspect while we are using in the manufacturing industries. Okay, that aggregate supply is the opposite of the aggregate demand. Last video we discussed about the aggregate demand. Okay, under that topic we have seen the particular important total demand of the finished goods of the services will be working the over specified period of time. Okay, so the aggregate supply, please be clear that supply of goods and services produced with an economy at a given price level within some stipulated period. There is a certain period. Okay, under this aggregate supply we have to using the final goods and services produced by the any companies. We have to take the manufacturing or the suppose we are taking some industries, electronical industry, automobile industry, whatever the companies we are producing. Okay, that particular companies will have to make the some planning to sell us some certain price with some stipulated period. Okay, it can be consider the simple supply, which is the product or the service available from a single or the individual activity producing. Okay, simply we are telling the aggregate supply in the economic part, the gross domestic product will be considered. Okay, that is a GDP. Okay, it is normally measured and reported over a period, either the 1 year or sometime we are calculated as the 3 months once or the 6 months once. Okay, it is also referred to as by economists and analysts as a total output. They are call it as a total output. We are discussing under the commonly affected by the price criteria. Okay, so suppose we are raising the prices, generally indicate that business should expand their production. That is, they are going to increase their production to meet a higher level of aggregate demand. Okay, when suppose the demand increases, automatically the constant supply the consumers compete for the available goods and pay the higher prices. Okay, please be clear that particular aggregate demand and supply is the opposite way of concept when we are considering that to induces the firms to increase the output to sell their more goods activity. Okay, the resulting supply increases should be causes the prices to normalize and also the output to remain elevated, and also the aggregate supply making in the two important variables. Okay, so the first attribution including in the Some aggregate supply is changes in the size and the quality of the labor and technologically innovated, and wages are increasing. The wages should be increased is based upon the production cost. Okay, the changes in producer taxes and subsidies, changes in the inflation. These are the main important factors to consider.